emerging market population growth continues to be significant. They don't have the aging population issues that everybody else in the world does. And they have industrial strength in the sense of growth that is going to continue for the next 40 years. So demand alone over the next 20 years is going to continue to be good. And if you are in a good, strong emerging market a fund, and the only way I play emerging markets, Fred, is through Timothy's Emerging Market Fund, because I want to stay biblically responsible. And it's so hard for me to be able to do the research on individual stocks in emerging markets, but I'm able to do it. That's why I like Timothy's Emerging Market Fund. So that's one way that we're able to stay on top of that. So I would, if you've got 20 years or so, that's one way you can play it, is with Timothy plan. Folks, I continue to be amazed. Thank you, Fred. I hope that helps. And the India market is going to continue to be strong. I think the emerging markets over the next 20 years. Do I see a little bit of a hiccup in emerging market funds, even Timothy fund, for as good as it's been this year? Do I see a hiccup on the horizon? Sure. But that's going to be primarily due to a currency issue, to currency issues, and some pullback in commodity prices should we start to see more of a recession. But it's going to be short-lived. And again, if you're long-term investors, that's why I've changed two of my asset allocation models for the two that are under 35 to include a portion in emerging markets. I think that's very important to note.